Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Dadia. A good momentum is what we are seeing in terms of where trade is concerned. Markets are nearly at the day's highest levels as well. 19,934 is the level that we're tracking so far. In fact, we did hit a high of 19,945 in trade as well. And you are seeing a 0.5% up move in terms of bank nifty. So interesting moves in terms of markets. But to discuss more in terms of individual stock specific action, joining us on the show is Sameer Dalal. Sameer, good morning and welcome to the show.
Good morning, and thank you for having me on the show.
Always a pleasure to speak to you. Sameer, overall, let's start with few of the railway names as well as the shipping companies that are in focus as well in today's session. Now, clearly, this is on the back of the commentary that we heard at the G20 with regards to a specific corridor that could be announced as well. What's the sense that you pick up? Because a good buzz coming in terms of all of these names today. They've said India, Saudi Arabia, UAE, US, and select European countries will join hands. And this will be a potential rail and shipping corridor to enable greater trade amongst the countries. It is a long shot. The time to that will take for something like this to fructify is also going to be very long. So yes, it is a sentimental move, but your views.
You rightfully said it. It's a sentimental move, right? So actually, if you look at it, a lot of these railway stocks, defense stocks, and stocks in where some of these spaces where probable announcements are expected have moved far ahead of what actually the fundamentals justify. So even if these railway corridors that you talk of were to fructify, see the light of day by the time they start the tendering processes, by the time they get on ground, by the time the profit starts hitting companies which are catering to that space, I think it will be a minimum of 3 to 4 years. And to have stocks running up the way they are right now, I think it's a bit unrealistic and unjustified. Simply put, I mean, some of these railway industry stocks are trading at PEs of 8 to 12, and now they are all about 20, 25 times earnings, right? So that is one thing. We don't deny the fact that business opportunity and what probably the market is trying to preempt is that the next few years growth will be really good. But we don't know which of these companies is going to get what part of the order, what size of the order, what the profitability is going to be. So I think we are putting the cart before the horse, and that somehow never works out, right? So I'd be a little cautious on all of these counters at this point of time. I would not be in a rush to buy any of
them. Right. Apart from this, the other part that is in focus is your, ethanol stocks as well as your biofuel companies. And this is on the back of the Global Biofuel Alliance, which has been launched with this support of 19 major consumer producer and interested companies. Praj is seeing some massive run in trade today. Ethanol producing sugar companies also seeing great moves. What's your view?
So we've been saying it for some time that ethanol is really the story in the sugar space, right? Sugar has its ups and downs. You have cyclicality. You have prices which fluctuate based on what certain government chooses to do for exports or how the FRP of the sugar cane is going to be, which determines the profitability or eventually for the sugar companies. Whereas ethanol is not going to have a similar kind of situation. Ethanol is going to be something that is more consistently growing on its consumption for the fuel basis, and that is where maybe steady stream profitability can come out because prices are not as volatile probably as they are in the other spaces. I mean, in the sugar space. So that is where we've always been saying that ethanol is the game changer. So companies that do have large ethanol capacities would be the beneficiaries of this shift that is happening. Now, coming to Praj and coming to the news that you talked about, I haven't seen the news article, so it's difficult for me to comment on that. But Praj in itself has also run up a lot on expectations that all of these sugar companies will increase their ethanol capacities, and or not only sugar companies but other kind of biofuels and ethanols will be used for the petroleum space. And if that happens, Praj being one of the players who sets up all of these capacities would see a good amount of order inflow and execution. But once again, I still believe that the markets are a bit overheated in the mid-cap, and Praj is no exception to that. I think again here the cart is being put before the horse. Yes, let the orders come through. Let the executions happen. Valuations again are not cheap. They moved up quite significantly. So again, a slightly cautious view even on Praj. Sugar counters on the other side. Maybe you could take a investment call in a Balrampur Chini, Ugar Sugar, where the ethanol gains are not totally out of the way. Yes, valuations are a little bit on the higher side, but again, growth for them could be continual for the next 3 to 4 years from the ethanol side.
Right. So that's with regards to your ethanol and biofuel companies. Moving on, you have a GMDC that is in focus, a good up move coming in today's session, and this is on the back of the commentary that's coming from the annual remote report, which clearly indicates the kind of growth that they're anticipating over the next 2 to 3 years, as well as I think 2 or 3 times is what they're expecting their net worth to grow as well. Taking the positive commentary into consideration, Sameer, what would your view be on a GMDC?
So a lot of your uh, raw material producers for the power generation capacity. So GMDC eventually is getting a raw material which is used for power manufacturing, and that has been in demand. Given that is expected to grow because more and more of these capacities are now even being put up. More capacities are expected to be put up even in the non-green space. So we are hearing news around some more coal-based plants, lignite-based plants, and all of those things eventually will mean that volume growth for these kind of companies can happen. Uh, we think, again, how do I put GMDC in the simplest way? The cost of doing business for them is very low. Where they face difficulties in the eventual selling price, right? Because their volume has not been a significant issue. It's been the pricing that has been the issue, where prices have continually changed. But with now expectation of volume, demand expected to return, we believe pricing could be beneficial. And given that fact, GMDC could stand out. Now, yes, the stock has also run up quite a bit. The commentary in the annual report, which you're talking of, I haven't gone through the annual report recently. So, I mean, I don't know what exactly they've said in that. But the way we look at it is these are good businesses to own over a long term period. But you have to be a little wary about the cyclicality of prices. At the moment, again, crude, coal, lignite, all of these other ore prices are beginning to see an uptrend. So GMDC benefit, but these turn very quick also. So you have to be a nimble player in companies like this. I've always said that commodities is something where you have to be quick to get in and quick to get out. If you believe things start turning, this is a stock also I would advise to book some profits whenever it runs up a lot, because I've never seen it going one directionally up. It's never been a long-term compounder. It's had its problems, and I don't think those are going to change. So, if you want to invest, sure, there you can. But I would be someone who advises that on rallies, significant rallies, book profits.
Right. So that's with regards to where these stocks go. Adani Enterprises and Ports are interesting names to watch out for in today's session. And that's on the back of the promoters' increasing stake. You are seeing some great momentum. What's your view on both these names?
So Adani Ports, I've always said, is something that I've liked, and for the simple reason that when India import-export business continues to see an uptick, without working with Adani Ports, it's impossible to grow. And for India to continue there, given the fact that they control almost a huge chunk of the large-size ports that are there in the country. So again, this business is capital intensive, and they finished all of their upfront capital needs. Now what is happening is they're getting their benefits out of all the capital that they put in. Again, where I find difficulty in the Adani ports is only purely on valuation. I don't deny it's kind of like a very capital intensive, so there are barriers to entry to this business. Apart from capital, getting the authorization at various locations to build a port, for the logistics setup, for all of those things, which Adani ports have. So I'm not denying the fact that they do have competitive advantages being an early mover in the space, but valuations don't justify, because the business that they are doing, I mean, storage, the imports, exports, blah, 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 is not going to see a sudden growth in one sudden year. It's going to be more gradual in nature. So I think, again, the stock has run up more than it should in the near term. Great business. I like it. Any corrections below 700 rupees would be something I would recommend to buy. Adani Enterprise, I don't have as much of a positive call or a call on it, so I would refrain from commenting on it.
Right. Another sector which is seeing some smart moves is the power pack. And this is not only in terms of, today's session, even Friday we saw some great moves in terms of PFC, REC, NTPC. How are you looking at these names? Because clearly it seems that capex is something which is going to actually work well and augur well for these power finance companies as the first leg, and then move to power companies, discoms.
So first up, disclaimer: we were invested in PFC and REC, and we are actually selling stake right now. We are selling out of it right now because the run up that has happened, we believe, has captured a lot of the positives in PFC and REC. Now, having said what I'm saying, look, these businesses over the recent past have had a lot of difficulty in growing their loan book. If you look at the loan book, it's 75% catered to the government of India, or 80% as large for PFC. 80% of the loans are to all government entities, be it private, central government, state governments, discoms, blah blah blah. Only 20% was with the private sector, and that too because the private sector, they faced a lot of difficulty with NPAs. They faced, with the private sector not really investing in the power space in the last maybe 7-8 years. Now they've talked about diversifying, going into lending to companies that are catering to railway, catering to roads, and renewable energy is of course something they're going to cater to. And there's a lot of expectation that these businesses will see the light of day. Like you said, there's a lot of expectation on capex coming through in the next 2 to 3 years. And because of which these stocks have been re-rated significantly. I think PFC's run up from 100 to 300, REC from probably 80 to 240. So they've both been 300%. I mean, 2x returns they've given you in less than a year. So again, valuations have probably caught up with the fact that these expansion plans are going to happen, which is going to allow them to grow their loan book. So we now got to wait. I think what you're going to see is not a correction in the stock, but a sideways movement, because the valuations are still not expensive. They're still trading at one-time book. But if you look at history, they've never really traded above one-time book. So they're trading at probably fair value. So I expect sideways movement for the next, say, 3 to 6 months in this stock. So that's why I gave the heads up that I am actually booking profits in that stock. I am positive long term, but in the near term, I think most of the positives are captured.
Right. So that's with regards to power companies. Moving on, JSW Energy is in focus as well. In fact, I was just reading a report in Economic Times where they're saying that private investors like TPG, TEPCO, and Brookfield are in advanced discussions to acquire a minority stake in JSW Neo Energy, which is a subsidiary of JSW Energy. Now, overall, I think if I'm not mistaken, it's nearly $500 million is what they are aiming to raise through this stake sale, which will likely be utilized for expanding its presence in the renewable energy segment. The stock is up nearly 3 to 4% in trade today. How are you looking at this one?
So JSW Energy is one of the power companies that has some size, scale, ability, and the JSW Group at the end of the day has shown that they are able to deliver on what they commit. So from that positive point, JSW stock group is a half decent one. I mean, a decent one, and I would look at it. Now, again, JSW Neo, what we talked about, the fundraising that they're doing is for the renewable energy space, right? So the solar capacities, they're talking of hydrogen storage capacities, they're talking of various other projects in the green energy space. And that is something that is going to be a focus, and which is why, it's a previous discussion on PFC, REC also, we talked about there's a great opportunity for growth in lending to that space, because these are very capital intensive, upfront capital requirement businesses. So JSW Neo doing this dilution is also very clear indicator that the capital requirement is there, and we're trying to get this capital from various sources. Again, I think the stake sale will be quite dilutive, which means that then it starts becoming a sum of the parts you have to start valuing JSW Energy on. And that to me is to some extent is a negative, because at the end of the day in India, I think Worldco discounts in India can go as high as to 50-60%. So that is one negative that will start factoring in going forward. In the near term, because of the fundraise, everyone's very excited, everyone's very positive on it. But again, the stock has also seen a huge run up. Again, valuations not comfortable for me. I would avoid to buy JSW Energy at this point. But like I said, corrections may be something we can do.
Right. Lastly, BSE is another one which has seen a good run up, and it was interesting to see how it ran up post the buyback announcement and then a revision that came in terms of the buyback price as well. How are you looking at a BSE, and what would you advise investors who are holding BSE stock to do?
So honestly, BSE has been an absolute shocker of a move. The kind of rally that we've seen. I think if I go back just 4 months or 5 months, it was about what 500 rupees, and 500 is now as high as 1400 today. If I'm not mistaken, 1420 or something. It made a high of. Look, what has changed for the business in BSE? One, the FNO space where they were almost non-existent is beginning to see some upticks, right? Uh, Now, if you look at it, the largest share of the volumes that happen on the equity exchanges is in the futures and options segment. BSE had no share in that, and the cash volumes were also reducing. But with some amount of expectation of this futures market for the BSE seeing some light of day, I think people are building in a bit of positive, but I still think it's very early days to expect that. Now, we always knew that BSE is a cash-rich company. They have the stakes in CDSL, which they were going to monetize, which they did, and that's why the buyback has come. They, in fact, even increased their buyback price. But given the kind of run-up that's happened, I think all the positives of the near term are factored in, which does not factor in the near-term negative that the FNO market, which they tried to revive in the past, they did not revive, but start in the past, picked up some steam, and then again died down. So there's nothing stopping that from happening this time around. They're pretty much surviving on the fact that one product of theirs, which is the Sensex in future and its options are trading quite significantly. They haven't really got any real share in other products in the FNO volume. So till that really sees light of day, I think it's difficult for me to stick my neck out and say that this could be a compounder going forward from the current levels. Do I like the stock? Yes, I think it's a good company because I think any company, any business that does not require too much capital investment and that can grow without that capital investment and deliver strong ROEs and ROCs are great investments. But again, the stock has run up. So I would, in fact, advise someone to take some profits off the table for the near term. Uh, if the stock comes below the 1,000 levels, yes, maybe one can consider, but we're talking of a significant correction for 400 rupees from the current price, given the kind of run up that's happened. So it's a significant correction before I would recommend a buy.
Right, so that's with regards to Bombay Stock Exchange as well. Thank you so much, Sameer, for joining us on the show and sharing the views so clearly. Good momentum that we are seeing in terms of markets as well. 20,000, that is something which we are eyeing, but probably it'll take a day for us to see those levels yet again. That's all that we have in this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.